All right, I think we can start now. Everyone, welcome back to our fourth episode of our weekly State of Crypto webinar. On behalf of 21 Shares, welcome. Quick word about who we are. We are the premier issuer of institutional grade passive investment trackers for crypto assets. My name is Hansen, and I'll be your host today. And just quickly from an admin point of view, if the screen is too small for you, you can put it in full screen mode on the top right. There's two arrows pointing in two different directions. And if you want to remove the sidebar with the chat, questions, and so on, you can also press this little arrow to the right next to the button, and it will be a full screen. Now, our story is simple, right? One of the key problems we identified is that institutional investors can't easily buy crypto assets. There are technical hurdles, regulatory hurdles, and at the end of the day, it's just not easy to enter a new asset class. And at 21 Shares, our business is very straightforward. It's not easy, but it is straightforward. We wrap crypto assets into a familiar, plain vanilla ETP structure so that anyone can buy crypto assets like Bitcoin or Ether readily via their traditional bank or broker. So as you see here, we have a total of 11 products in 3 different currencies listed on 3 different stock exchanges. So what are we going to do today? I mean, you guys know this week was a turbulent week in the traditional financial markets, especially within the commodity space where the oil news dominated this week's newspapers. And today we're going to kick off the session with a quick market update to see how the digital commodity market performed. This will be led by Mr. Davide Vicini. And following that, our researcher Elisea Dinga will shed some light on the question why Bitcoin has not gone mainstream yet, with a particular focus on the geographical restrictions. If you're in Switzerland like us, you can get Bitcoin around every corner, even pay your gin and tonic with crypto at Divino in Bahnhofstrasse, but that's definitely not the case in many other jurisdictions. And today we learn why. Now, before we go to the market update, the quick fun news of the week. What would you say is the most famous hedge fund in the world? My answer would be Rentech's legendary Medallion Fund. Medallion is the flagship fund of Renaissance Technologies. Most of you probably know them already. They are the best consistently performing fund in the world. I think since 1988, I believe. No, 89 maybe. They've been performing on average 40% after the fees. Yeah, and even this year alone, it's just 39% year to date. Well, why is it relevant in this webinar? Last week, on the 18th of April, Renaissance Technology has issued an investor brochure that their flagship fund Medallion is now permitted to enter the CME cash-settled Bitcoin futures. And that's actually in light of the news from 2 days before that, the 16th of April, that the open interest for the CME Bitcoin futures has gone up by 70% compared to March, which historically has been a clear indicator for growing institutional interest. So what I'm saying right now is one of the largest and definitely the best performing hedge fund in the world ran their financial models and decided that it might be a good time to enter the Bitcoin market now. Now, at this point, it's important to say, right, Rentech is a quant fund. They usually do arbitrage and volatility trading. They don't buy assets and hold them like other funds. But the fact that Rentech thinks the Bitcoin market is mature and established enough to join in is quite a big signal by itself. Now, that's it from my side. As always, if you have any topic you would like to cover or have questions about our products, you can reach out to Ms. Sina Meyer, who heads our business development in Switzerland. If you have any questions now during the webinar, you can post in the question section. We can see them. No one else will see your questions, and we'll answer them at the very end. Now, thanks for joining. I hope you have fun. And now I'm handing the virtual microphone over to Mr. Davide Vicini.
Thank you very much, Hansen. Hello, all of you. Nice to see you back. So very interesting. This week, market will be run very smoothly to give to my colleague Elisea the chance to explain a very interesting topic, why a Bitcoin has to go mainstream and didn't go mainstream yet. But before that, let me cover what happened this week, what we see as technical points for trading, and again, to remind what halving expectation can be. First of all, Bitcoin, Ethereum, Ripple, Bitcoin Cash, and Bitcoin SV are all in the green side of the price, either in these past 2 weeks where the financial market suffered a lot, especially from the oil futures drop. Bitcoin, the main currency, still plus 5%, 4.32. Bitcoin Cash last week did plus 30%, and this week is stable at plus 2%. Ripple and Bitcoin SV as well stable. Ethereum is gaining a lot of momentum, plus 15% last week. Bitcoin is still the leading by market cap, still around 130 billion. Volumes are high as in the last 24 hours, 35 billion. And more interesting, traders in Coinbase, retail traders are 70% on the buy side of the book. Now, covering a bit of technical analysis of Bitcoin, I love to give a simple explanation, but very visual. We see that the support level the last week was pushed up from 5.7 the week before to 6.2 support. We see the resistance being at 7,000 per Bitcoin, but the key level to watch on the next 2 weeks is 7.2K. If that level is breached, then we can see a road for the 8K and for the halving for a bullish experience. So what happened the last 18 days? The price range was very stable between 6.8 and 7.2K. Volatility is not extremely high as in the financial market, and most of the crypto did not suffer a lot from the oil futures crisis the last days. Some interesting fact: traders are stocking up coins. Overall, holders are stocking up $530 million in Bitcoin per day, which means 75,000 Bitcoin per day in average. That's a lot. Why? For the halving. Wallets with more than one Bitcoin are rising up. We see that from 1 year, 12 months ago, there were 400,000 wallets with more than one Bitcoin. Last month, there was 850,000, so a bit more than the double. Last interesting fact before I pass to halving is that Coinbase this week saw a lot of buy order in the range of $1,200 per client. These reflect the US stimulus check. Very interesting and very bullish for the saving of people. Now, last, what we can expect and what the effect can be from the halving. 3 cases: bull, neutral, bear. The bear case, it's built upon the assumptions that many miners cannot longer sustain their cost because the actual Bitcoin that they will gain for the mining activity will be less, and so they will leave their activities and go bankrupt. We don't believe that much in these assumptions. The neutral case is a case in which Bitcoin already priced in the miners' bankruptcy and so the oligopoly of miners, but we know that oligopoly, it's a very difficult term for miners. Yes, there are a few mining entities, very big, but this does not mean they control the market because our mining pool. So people from all over the world, they can subscribe to the service and mine as I buy space in Amazon Web Server. Yes, it's Amazon, but then the space belongs to me, to Hansen, to Larry, to Elisa. So the neutral case is pointing that Bitcoin price already reflect the halving and people already reflect it. The bull case, it's building upon the assumptions that miners will price their Bitcoin higher because we will reach the 21 million very fast. This means that the miners cannot sell the same quantity of Bitcoin for covering their OPEX as before, but they will sell less quantity for a higher price. These are the 3 cases. We believe that one is not really happening.